Hey guys, welcome back to another episode of OX Research. Today, we've got a kind of a fresh crew, I think, for the live stream, joined by Dan Shapiro from the research team, Effort Capital, or David, as some may know him from Blockworks Advisory, and Carlos, probably a more frequent guest from the research team as well. How you guys doing today?
All good. How are you guys?
Life is good.
Been better. The been better. The coin news could have been better, but outside of that, I can't complain. Living the dream.
Man, this cannot help Boccaccio absolutely blasphemizing you on the in the comments, calling Effort Capital a fraud. Tough way to start the stream. I think we're all doing better than Ansem, though. Supposedly caught by authorities. I'm not really sure if that headline is true or not, but it's running around on CT right now. So funny at least. Rumors that he got a DUI and rumors that he's being locked up over misuse of WIF sphere funds, which I'm sure the any WIF bag holders that, if they still exist, would love to jail him for those crimes.
I would say, I feel like Ansem wouldn't get arrested at the top of the market. He'd get arrested in the depths of a bear. So this feels false to me just on that premise.
Yeah, the timing feels off for sure. Usually it's, you get a couple more months and then something explodes and then the lawsuit comes after that. I don't know that we've necessarily had that yet, although if your reference is the WIF chart, then it's kind of already blown up pretty objectively. So maybe the crime has already been committed. Who knows? Want to give a quick shout out before we jump into things to Aptos, sponsor today's stream. Appreciate them, and we'll hear more about them coming up later. But otherwise, let's get into it. I think the markets look a little rough today. There were some poor prints that are maybe kind of driving things this morning, broadly, not just in crypto, but across markets. But some of the other interesting stuff. I think the big thing maybe this week that I'm seeing a lot of chatter about is the Figma IPO. The IPO price for Fig was $33 a share, settled at 33, and then it basically instantly opened at $100 at list the other day, and then after markets, after close, got as high as maybe 140. And so I'm seeing just FinTwit, but also CT people are they're all over this one. And we're back to this narrative of the bankers win again. There's a couple $1 billion that Figma missed out on because of, mispricing the IPO price for the shares. Some different comments of crypto fixes this, do it on chain, or fix the IPO process. I'm curious if you guys have any big thoughts here. I know I was going back and forth a little bit with James Christoph and Noah in the OXR Telegram, and James, of course, on the side of the banks was saying, yeah, it works well enough. We don't need to change anything. But I think there was also some comments of it's kind of a hard thing accurately pricing, especially when you kind of have retail mania right now, which I think we kind of do have to an extent. I mean, you look around at Palantir and have to think, at least to some extent, there's some retail fever back in the markets. I don't know do you guys have any strong thoughts on Fig? I got filled for one share, so little upset, but also can't be too mad, right?
My immediate thought is that if you open this up to have it fully on chain, that there's more market participants. That I guess it's kind of similar to prediction markets with Polymarket, right? It's anyone can bet on anything. Polymarket historically is better at pricing odds of events happening before mainstream media or people that are so-called experts in traditional sense. Now, I don't know exactly what this would look like if you have all IPOs or all ICOs, I guess, on chain. But I have to imagine that the more market participants leads to better pricing of what the market, deems these equities or these capital assets at. So it definitely feels pretty egregious. I have a good tweet up on the side right here I'm looking at, but Figma left $2.3 billion on the table, nearly double what they actually raised. They IPO'd at 33, obviously. Target open at 95. If you look at other other major IPOs, historically speaking, DoorDash, Airbnb, those both left $3.4 to $3.5 billion on the table. And it's how, this person that posted this is saying it almost feels like deliberate mispricing, because all that lack of funds going back to the founders, the employees, retail participants is really getting sucked up by the IBs, the investment bankers, and largely the insiders that aren't working for the company and actually trying to drive value for shareholders. So it feels a little egregious. Don't know the accuracy of this, but they're saying in 2021 total, this amassed over $50 billion in underpriced IPOs. Now, again, you're never going to get it 100% accurate, but it does feel pretty off between Circle and Figma that they're off by such a large margin. Like if I was off by 200% in my job, I feel like Blockworks would fire me. Like, why is that okay in this sense?
Yeah, I think I kind of agree with that, but it's also, I think, reflects the state of the market. Like, I think in 2022, you couldn't even IPO, or like no one would want that. Like, I'd be curious to see like statistics from 2021 and like seeing like how those how those compare to this year in terms of number of IPOs, amount raised, et cetera, just to gauge. I think like IPOs, like it's at least one good metric for like gauging like fraud in the market. I don't know if you guys agree with that, but I also think like it's not just like it's egregious like behavior by investment bankers. I also think like it's just a reflection of the state of the market today, where we have like just a lot of speculation, and it's a kind of a bull market in equity. So you really can't do a lot about it.
Yeah, I think that's a good point. I know James actually dropped a stat on us last week or maybe the week before on IPO numbers, and like we're actually like multiples away from how frothy the market was back in 2021. I think on like an actual number of IPOs and as well as like dollar basis. I don't remember the exact number. I know we have a clip somewhere out there that got into it, but it was something like a couple $100 billion in 2021 deals, and maybe it's like 30-40 billion or so in the past year. So like not even close, right? And I'm sure the actual number, the amount of companies is probably a pretty large multiple as well. But I do agree there's been like a little bit of we've seen a little bit of a trend here, at least in recent months. Last year there's been some big launches over the past year. I want to say like Reddit IPO'd last year, and actually went on kind of an insane run, but it didn't. I mean, I think it was still up, maybe 30-40%, that first day or first week, but didn't pop 3x like it in a day or 2 days. But it did go on a run over the following months. I think CoreWeave is kind of another example of that, though their timing there may have been more market based, where that was what I want to say March, April timeframe. Like the markets were kind of shaky, hesitant. So it's maybe not so surprising that the thing instantly ripped up on day one. Whereas now I would agree that like we definitely feel like we're in more of like an exuberance zone. Like a lot of excellence, I guess, is being priced into a ton of equities right now. So it's not crazy like for people to look around and see that and go, well, yeah, let me just like shove into the hottest new IPO.
Yeah, one thing I wish is that ICOs behave the same way that IPOs. It's just, we're in the wrong industry, man.
Yeah, maybe that's a conversation to get into, is like this idea of crypto fixes this, or like bringing it on chain fixes this problem. I would kind of question that a little bit, at least to the extent that we've seen a few tokens launch on chain in the past few months, and like they're definitely not the norm is not popping 100% or 200% on day one. In fact, it's been quite the reverse. Whereas we've seen multiple IPOs now in the past few months that, if you buy day one, you're up multi-X with, either that week or within the next few months. So there is definitely like a big capital difference in like how people are allocating to these certain things.
Yeah, it's almost as if there's the opposite problem here, where all the, I guess like the private market in TradFi is not able to accurately price how the public market values these things to the upside. But in crypto, the private market is overvaluing things, and ultimately, either not necessarily retail gets left holding the bag, but more so, um, I mean, in the case of Pump Fund ICO, right? Like almost, I don't know how much money was raised from private investors, 700 million plus of the 1 billion plus ICO for Pump. Like they're down. They're down nearly 50% in a matter of weeks. So like they got hurt badly by it. But again, I agree. I don't know if moving things on chain just naturally is going to fix everything, but it is interesting to see, like, I guess the almost opposite problem that TradFi and crypto has today.
Yeah, I mean, I think I'm not an expert here by any means, and everyone's made some great points. I think Figma is interesting because they're kind of like they're AI adjacent in the sense that if you're vibe coding any form of like front end or mobile app, right, like you're probably using Figma. So I think that a lot of a lot of people that probably work from home, designers, software engineers, whatever, that are also probably in the market all day, on their other monitor, like they're probably aping into this thing, right? Because they know what it is. I think CoreWeave, that is very explainable by AI as well in terms of what it did. And then I think Circle makes a lot of sense, right? Because I think everyone's been so excited about regulated stablecoins, and especially with like the Genius bill, like I think there's a lot of reason for that to go up. So I don't know if it's just necessarily like a equity, like an IPO versus ICO dynamic, or if it was just like this was like an idiosyncratic thing, like specific to these businesses. I do think the mispricing point is interesting because like like the whatever investment bank was managing this, I'm sure they've had I'm sure they have thousands, hundreds of people that are on this and that are highly skilled that are pricing it. So like assuming that they were trying to like price it lower, like I'm curious like if that was more on purpose as opposed to like a mispricing. Like something that got me into crypto back in the day, right, is like the fundamental reason why like public
Did we
markets
lose him,
exist, like
or is
why
it
the
just
stock
me?
market. Sorry,
I think it's just you. I hear him.
can you hear me?
I hear you, Daniel.
Okay, maybe
Yeah,
we
we
lost
hear
me.
Oh, it's that Ohio internet, man, out there.
Sorry,
That
sorry,
sucker
I
internet.
interrupted. Go ahead.
Right, like the purpose of the stock market isn't to like make you money, right? It's for it's for the founders and the team and the people actually like added value to the company. It's for them to exit, right? And so IPOing, right, it's like an exit event, and so in a sense, right, like you're not supposed to be the one making money from that, right? So I'm sure like doing stuff like this on chain can make it more transparent, and obviously that benefits everyone. But with like the pump ICO, it's it's not like that helped at all. So I think there's a lot of different factors here. But I think the thing I'd be most curious about is like why was it priced so low by these by the investment bank?
Yeah. One last thing I'll say on this point is, like, I'm not an expert again. I don't know the behind the scenes on like what building a book looks like in the IPO process for IBs, the investment banking side. But I kind of curious, like, when does a company have to determine whether or not they want to do a direct listing or an IPO? Like, how early in their life cycle or like leading up to potential, going public, is that determined? Because I feel like in this kind of market, Carlos, you said it, like it's clearly a frothy bull market. Why didn't a Figma, why didn't a Circle just do a direct listing and let the market determine what that price was at? Like Coinbase did this in 2021. They launched at 475. They there was a direct listing. I think it was market determined. It quickly fell to 230 in a week, 2 weeks. It famously went back up to like 400 and something like that at the top of the 2020 bear market, top of the 2021 bull market, and then obviously it's proceeded to go down like 90% because all bull market ended, prices eroded quickly, FTX blew up, so there's a lot of reasons why. But I mean, if I'm a founder today, I'm not doing the IPO. I am going direct listing, and it's like the worst case scenario, I guess, is that I underprice myself, but it's like clearly the IPO process is not perfect either.
I mean, I think it's a matter of raising capital, no? Like with the IPO, you want to raise capital. Direct listing, that's not really the focus, as far as I understand.
Can you raise capital though in the direct listing process too? You're effectively like putting a certain number of shares on the market and determining what the supply and demand is when you directly list.
If I understand correctly, in a direct listing, you're selling your existing shares, but
yeah,
I'm not entirely positive on that.
Okay.
Yeah, I do believe that's correct. Like often IPOs, you're maybe selling some additional shares onto the market versus selling pre-existing. I guess I think the factor that maybe plays into these direct listings as well is like Palantir is probably like the strongest example where I guess if you have like this, you can build, at least nowadays, it seems like you could build this like retail enthused base of investors that rally around you. But I don't know that necessarily works for every company. But in the case of Palantir, it seems like doing a direct listing kind of like, maybe targeting smaller investors, but giving them, potentially more upside by having, I don't know, maybe a fairer price of listing the share and like kind of trying to target them rather than going working with the banks, going the traditional IPO route. Like maybe it earned them some goodwill, and maybe that is what helps them kind of drive towards a much more absurd like PE multiple, because the people that buy it now, they don't really care. They're just like, yeah, we love carp and we just want to like hold this stock to the moon type of thing. But obviously that doesn't work for every company. There's probably a big trade-off here just in terms of like the amount of leverage that your business has. Like how strong of a brand are you? Like if you didn't work with intermediaries, like could you feasibly go out and raise the amount of capital that you want to? Like, do you have enough of is there enough of an enthused investor base to pull funds from them? And that's probably the biggest question. Cool. Before we move on to the next topic, if there's no other thoughts, quick shout out to, let me get this banner up, our sponsor for today, Aptos. Bitcoin DeFi is heating up on Aptos. With nearly 400 million in BTC assets on chain, Aptos users can now earn yield on their Bitcoin via Echo ABTC and OKX XBTC without the typical bridge risks and high fees. Thanks again to Aptos for sponsoring today's stream. Let's jump back into the action. I guess outside IPOs, or maybe even leaning into them a little bit. I know David, at least, I don't know when that was, a couple of weeks ago, Coin versus Hood has been kind of all over the timeline for a while now. Those are two pretty popular. I guess you mentioned Coin was did they do a direct listing in 2021?
Yeah.
Hood obviously IPO'd around the same time, both coming to market around that 2021, like, high excitement. That was again, we mentioned it, like period of like peak IPO activity and like kind of retail investor activity in the markets. Retraced a ton in the, going into the 2022 like bear market for crypto. And have since then have both kind of performed pretty amazingly. But there's been this big, Coin versus Hood kind of conversation, especially recently, like for whatever reason, the past, maybe 4 to 6 months, that's been all of it, rather than talking about, Bitcoin versus ETH versus Sol, et cetera. There's been more conversation around these, sort of fintech TradFi entities capturing more value from crypto and like, maybe what's the best way to be exposed there. And these two names kind of pop up the most. I'd be curious, David, your thoughts. Maybe we should get into like the thesis for Coin and relative to Hood. It seems like we're kind of working with two businesses that are kind of moving in sort of opposite directions, right? Hood started on like the equity side, like give retail users like an easy platform to like trade stocks. and then they've expanded those listings, and they're leaning a little more into crypto now. And then obviously Coinbase is the exact opposite, right? Been in crypto for a long time, offering exposure to crypto assets for probably in the beginning, maybe more of a retail friendly crowd, though the institutional side of the business has obviously grown quite a bit, especially lately with, being supporting a lot of the ETF issuers. So, let's dive in. What are your thoughts on Coin, maybe relative to Hood, or kind of Coinbase itself, and like looking forward over the next few years? Like, how does that story play out, we think?
Yeah, for sure. It's actually funny. We had a 0x research episode in Q3 or Q4 of 2023, like literally almost 2 years ago. And we had this it was like very early in, I would say, Hood's leap into crypto. It was right when, this is obviously before Robinhood chain, but this is when Robinhood partnered with Arbitrum on Robinhood Wallet. There was like some very small partnership, but there was like the beginning glimmers of like, all right, there's something going on between Robinhood and Arbitrum. At that point, we already knew about Coinbase and Optimism and Base. And we had this whole conversation back then about like these two companies effectively converging on the same premise or the same offerings, but on two sides of the, opposite sides of the spectrum: TradFi, DeFi, TradFi. And I think if you actually go back and listen to that, much of the same, nothing really has changed outside of, I would say, the appreciation of both equities, the larger market, realizing that they're pretty much converging on the same thing. But it was pretty prescient conversation back then. I would say the thesis for both of them is pretty strong. I think Robinhood's thesis, and I had a really good chat with Omar from Dragonfly on a Bankless episode 2 weeks ago. Shout out Omar and Bankless. What I would boil that whole conversation down to was like over an hour and a half long. It wasn't even a debate. It was really just like a roundtable discussion. Was Robinhood is more of like a play on the demographic shift of old wealth getting in the hands of new wealth, young folks like us, Gen Zs, Gen Alphas, you name it. Robinhood is their financial services partner. That is the one that they're growing up with. Back in the day, people grew up with JP Morgan, Morgan Stanley, Goldman Sachs. It's like they are antiquated, outdated technology. They can't they don't have the culture. They don't have like the tech, I would say the product first culture that we like to see. Robinhood has a beautiful app, and they're slowly starting to become not just like a trading focused platform, but an entire full stack financial services suite, from retirements to obviously crypto, options, you name it. And Robinhood is more of a play on like this demographic shift of younger folks getting a larger percentage of global capital or global wealth. And so far that is very much like proving to be correct. I don't know Robinhood's earnings offhand. I know that it was an overall good earnings report. They barely went lower on the news. Obviously, like Robinhood's ran up so much, you would have to imagine a lot of that has already been priced in. But the Hood thesis is sound, and I don't think that I think they're going to be a multi-$100 billion equity in the future, as long as like they don't mess up. They're incredible executors. They're product first company. They're best in the business, and yeah, it's a really strong thesis for them. Now on the Coinbase side, the overall thesis of Coinbase, and I said this on the Bankless episode, if Robinhood is a bet on the demographic shift, Coinbase is a bet on the secular technology shift to moving all capital markets on chain. This is before Paul Atkins's discussion yesterday about Project Crypto and moving all financial markets on chain. Like Coinbase, yes, it is an exchange. Yes, they are vying for the same kind of like retail and like younger demographic, of traders and degens and all that good stuff. But I think where Coinbase differs is like maybe the short-term play is like they're trying to compete with Robinhood one-on-one. The long-term play is being a thin infrastructure layer for the entire financial market. So what that means is they offer crypto as a service. Instead of trying to drive all flow to their front end, they say, let's just power the back ends of all the different TradFi firms that already have the distribution. So you're already seeing this with PNC Bank. Last week, they announced JP Morgan 3 days ago. So I think their plan is to kind of try to be like an octopus, extend their tentacles all throughout the financial system. They become like the AWS or the cloud layer, or the crypto layer for the future economy. Their take rate is definitely going to be lower because when you're like a commoditized infrastructure layer, you don't have as much pricing power as you do as being the front end, which obviously Robinhood and Coinbase today do have like large purchasing power, pricing power on that side. But I think the total addressable market for Coinbase is going to be much larger. I said something the other day. It's like, it's not Robinhood versus Coinbase. It's like Robinhood versus all of finance powered by Coinbase. Like, I think the reality is that there's a chance that Coinbase doesn't win because all of these users that are on using JP Morgan, using Goldman Sachs, PNC Bank, just ultimately like leave to go to join Robinhood because they are a great product and they speak to our generation. But if you think that customer deposits are sticky, that brand of JP Morgan, all these major TradFi firms are sticky and will stand the test of time, then I think Coinbase is probably a better bet long term. But you obviously need to see that thesis play out. You need to see revenue in those new verticals grow. And I didn't even get into the whole stablecoin side of the fence, but like Coinbase makes 70% of Circle's revenue today. Obviously, a lot of that goes back to customers in the form of rewards on the platform. But Robinhood still needs to play catch up on the stablecoin side, and stablecoins are a trillion-dollar industry, a multi-trillion-dollar industry over time. So I think Coinbase is a better pure play bet on crypto as an infrastructure provider. I've yapped a lot, so I'll pause.
I really love the way you framed it, and obviously, like we didn't talk before this, but I totally agree with what you're saying about Coinbase as being more infrastructure. I think that we're at the very very early innings of a lot of their partners, right? Like a JP Morgan, Citibank, etc., of entering into crypto officially, right? And I'm not just like, obviously the first thing it's gonna be is stable coins, but like I truly believe we're going to be moving towards the tokenization of all assets, and effectively everything being on chain. And so if you look at, right, if you like to what you said, if you look at the total addressable market, right, of equities, bonds, treasuries, funds, commodity, whatever, right? Like that is hundreds of trillions of dollars. And that, to me, that's like a lot larger of a market than just like retail trading. I think that the thing that tokenization unlocks is it's going to allow these kind of like outdated, companies, right? Like your Wells Fargo, your JP Morgan, whatever, like they're going to be able to create like really efficient, I think, easy to use user interfaces for people to just, access their services. Like I think ultimately, like people ask a lot, like why do we need to tokenize this? Like why does that matter? We can already do that the old way, whatever. Like I think one of the big things it enables is just like ease of access. And so, well, I could see a future where a lot of these, right? Like to me, the network effect or the moat is in the asset issuer, right? Like the person that owns it directly. And so if the asset issuers themselves can go directly to customers, right? Like they would effectively just be going around Robinhood, right? And so if Coinbase could, be like an infrastructure provider, whether it's like, treasuring tokens or some like specific services or, whatever it may be for these institutions. To your point, I think it's a more kind of robust bet because I think they're less likely to be disrupted. And also, like, I've used Coinbase forever. Like, I think I personally think it's a better way. It's a better product to trade crypto than Robinhood. But, I like, to your point, I don't know if like retail trading is like the thing that's going to make them win in the long run. And I'm not saying I'm like bearish Robinhood by any means, but I agree with your take that I think that Coinbase is working on a lot of stuff that I think it's been under the hood. Like, like we always talk about, like when a new L1 launches, right? Like it usually takes like 2 years for their DeFi ecosystem really get created and going. Like, I think Robinhood's probably a lot farther behind in crypto than Coinbase than like the average person thinks. And, we don't really understand that because we haven't seen what Coinbase has been doing because, right, like it's been illegal to do anything crypto related, like Operation Choke Point, et cetera, in the US. So what have they been working on that could potentially start getting released, unveiled now? Like, I know they have something called Project Diamond that I think is very interesting. They have a lot of crypto know-how. And so I think it's hard for me to bet against that. So I'd probably lean more to the coin side.
Yeah. Well, last thing I'll just touch on is coming off the back of this earnings report, like to me, nothing that shocked me. I knew that I have a pretty good feeling that they were going to miss on earnings. I am surprised, like candidly, the market reaction to it. But it is what it is. One thing I'm unsure about, which has me a little shaken in my like thesis, and I've been feeling this way for a while, is I think they're trying to walk and chew gum at the same time. They're trying to become the everything exchange while also trying to be an infrastructure player for all these major TradFi firms. And I love Coinbase. I speak with a lot of folks in Coinbase leadership and throughout the company. I think like they today don't have the product leadership needed to take on a Robinhood as becoming the everything exchange. They just don't. The mobile app is not nearly as good as Robinhood's. And today, most of our generation, younger generations, are mobile first users. And if they try to focus too much of their resources on becoming the everything exchange, which is like this new announcement they announced yesterday, if they focus too much on that and try to go toe-to-toe Robinhood, I worry that they're going to lose out on the opportunity that's much larger as an infrastructure player. Now, maybe they can chew gum and walk at the same time. Maybe they can do both. But if I'm JP Morgan and if I'm Goldman Sachs and all these major firms, I don't want to partner with Robinhood because Robinhood is clearly going toe-to-toe with me. I want to rather partner with Coinbase because they are crypto first. They don't offer trading of equities. They don't offer other, financial services. They can power my financial services suite as an infrastructure player, but they're not going toe-to-toe try to get like the retail and institutional customer. So I worry that it might like hurt them long-term with creating new partnerships. And I also think it could be a drag on resources if they try to compete with Robinhood, which candidly, again, has just had a better product. And I think has just more traction on customer deposits and overall like user base. So one of my concerns, but I will be happily, hopefully proven wrong, and hopefully they can do both. Because if they can do both, then it's game over. Like they become a multi-trillion-dollar company if they can become the everything exchange and also power all financial service providers. But historically speaking, they haven't been able to, I think, create the best product in either in crypto or, again, like I guess in US financial services.
Yeah, I feel like a big question is like if you look at the customer bases today, they're both of these platforms are kind of moving in a similar direction, right? We've seen a lot of like product teases and announcements that are very similar in the past few months. Like Robinhood dropped prediction markets, Coinbase just recently announced them. They're both talking about doing tokenized stocks and like teasing examples of doing those things, on their own, like, on-chain solutions. There's a lot of like crossover there. And like you mentioned, there's a lot of crossover in terms of like, yeah, we're starting, in equities, and then we're exploring like these other asset classes, or like we're starting in crypto, and then like inevitably we're going to want to serve, these other needs of users on the platform. I guess the bigger question there is just like who's going to have the greater brand leverage and like staying power of the average customer today or like in the future to say that like, my 10 million monthly active users, like, yeah, they already, trade coins on here or like buy their Bitcoin from us. Are they also going to, buy equities? Are they going to like use us as a bank? Are they going to like service loans via our platform? And I don't have an answer to that. I feel like it's kind of hard to have an answer without maybe polling like hundreds of thousands of customers, but it seems like that's the question. And to me, like the point around, not trying to step on toes by like pursuing all of these avenues at once and like, sort of like stepping on the toes of like Wells Fargo. It feels like kind of a non-point or like a kind of a moot point to even suggest, because I mean, they should just be looking out for their future revenue potential, and like if that means expanding the product offering, then that's what it means. And I don't know that it necessarily matters if like that's going to upset a bank because, or another, you know, institution because, hey, you know, we used to sell, you know, offer equities trading for these customers that have now gone to you. If they're still like this behemoth of a crypto platform and kind of serving as some part of the backbone for like the ETFs, for example, or like, you know, stablecoin infrastructure for, you know, institutions, it feel like it doesn't like take away from that strength. But I don't know. I think like it I don't know. It doesn't make sense to necessarily like discount working on something because you're going to step on somebody's toes. Like that's kind of the point, right? Like you want to take that market share and like grow your profitability, either grow your customer base or grow, you know, the amount of dollars that you can make from those customers.
100%. They definitely need. I think they'd be dumb to not try to become an everything exchange. I think and I didn't really, I guess, explain myself properly. I guess my worry or my point is, if they're going to do that, they need to have a better product, because right now they added derivatives, they added perps, and it just feels like it's a clunky. At least the mobile app is clunky, and it feels like it's a not one cohesive user experience. They have on-chain loans now, right? You can tap into Base Morpho deployment for lending. If you want to use that, you actually need to go to their sidebar, scroll down on mobile app, and then click borrow. And I need to go through 6 different pages and then do another few other, like jump through a couple more hoops, just like take out a loan. And I guarantee if like Robinhood did this tomorrow, it'd be like swipe up, 1 click, loan. And I think they need to just lower the barrier of entry. If they're going to become the everything exchange, they need to make their user experience much more seamless. And they also need to figure out a way to vampire attack Robinhood users, because I think Robinhood's done a good job of doing the opposite of vampiring Coinbase. So agreed, they should go down this route, but if they're going to do it, they need to think more deeply about their user flow.
Yeah, one last thing I will say is the kind of the onboarding kind of rewards like schemes that Robinhood has employed. Those seem to have been incredibly effective, right? Offering, you know, boosts for, you know, transferring a retirement account from a different platform. Like they've done a good job of vampiring some of these like kind of TradFi institutions where you're right, like these younger generations, like, you know, maybe they had a Fidelity account or they had a Vanguard account. And then Hood comes along and says, hey, well, you know, we'll give you 3% on top of that right now. You just have to keep it in the platform for a few years. And then you get to use, you know, your favorite mobile app for your retirement account, and maybe you'll gamble in it too. And we'll earn some extra fees. They kind of did a similar thing with crypto recently. They did like a 1% or 2% crypto like transfer match. So yeah, to your point, it kind of feels pretty similar to that, you know, vampiring Coinbase in that line. I'm surprised to not see like promotions of this nature and like kind of reward referral, like call it a flywheel, whatever you want. But like interesting methodologies to kind of get more customer assets on the platform employed by, you know, Coinbase and others. Seems like they've maybe like lagged there or not explored that opportunity so much.
Well, this is the problem, right? Like, again, I know we're talking about this for a long time already, but they have a referral program, but it doesn't hit you over the face on their app. Like, I'm not even gonna show my screen right now, but you have to literally go to a sidebar and it's like invite friends. Whereas on Robinhood, it's right there. It's clear as day. If you refer people or if you move assets on your platform, you get a boost. So like something stupid like that, I think hindering them being able to acquire their next customer. Ultimately, I'm worried about them moving into on-chain equities or prediction markets or tokenized equities, and it becoming another Coinbase NFT marketplace fiasco, which we don't want to happen. Because if they do that they were able to dodge, you know, cats that have 9 lives. I think companies have like maybe 2 lives. It's like they already lost their 1 life by spending too much resources, and it was bad. The NFT marketplace was a shit show. I'm worried if they do this again, like they won't be able to come back from it.
Yeah, more product focused, it sounds, is the big takeaway.
Yeah.
Understanding that a little bit more. Awesome. Before we pivot to the next talking point, another quick shout out to our sponsor for today's stream, Aptos. With nearly 400 million in BTC assets on chain, supported by a secure, fast, and affordable MVM environment, Aptos has become the BTCFi growth chain. Aptos users can now earn yield on their Bitcoin via Echo's ABTC and OKX's XBTC without the typical bridge risks and high fees. With support from Echo, OKX, and Stax's SBTC, Aptos is the place to go for the best in-class yield on Bitcoin. Appreciate the support, Aptos. And back to the show. Are any of you guys absolutely dying to talk about something in particular here? I'll throw out some ideas. I'm just working through some like different headlines and some things that people have been arguing about on the timeline. One, I've seen Mippo throwing out a ton of takes, like Zora has been all over the feed again. We're back on creator coins. I don't know if you guys have any strong takes there, but it seems this seems like a topic where we go through it's so over, we're so back every couple of months, and it kind of like works. It like works for a couple of weeks or like a month or two, and then the coin's kind of Eiffel Tower on the charts, and then we give up on it, and then somebody else does it. I don't know. Do you guys have that same view? Maybe I'll pull up the Mippo tweet as some background, but I think he thinks very positively about these platforms. Yeah, let's do this one. Saying the Zora hook is all about creator coins. For the first time, I'm logging in every day, and the viral hook is, what can I post today that will make my creator coin go up? Eventually, Zora becomes an indexed way to bet on creator coins as an asset class, so much higher. I kind of see like two takes here. I've seen some people say like, yeah, I could kind of see it like this. There could be like a future of like a new sort of paradigm for creators to earn revenue in this fashion versus like the existing content creator like ad and subscription kind of financed model. And then the other side of it is like we've seen what these charts do, like the coins go to zero and then everyone gives up on the platform and it dies. Do you guys have any big takes here, like thoughts on Zora, thoughts on creator coins in general? Like, do we think this is eventually kind of like a new kind of market paradigm for creators, or are we more bearish?
I don't know. I'm curious if you guys are users of Zora, because personally I never tried it, so I don't know. Like, I don't have that experience of logging in every day and having like that hook, right? But like, if you're like a user, I feel you can provide a much better perspective on like, is it like all speculation, or does it actually have something durable that you think can onboard a lot more people?
I like used it leading up to their airdrop, and then I've recently started posting again. I don't love it. I'm not like hooked on it, but it also could be by the fact that like I don't have enough clout to get my creator coin to go up. If you're watching this, Effort Capital coin is live and trading, so if you want to buy, go for it. But not financial advice. Do your own research. My posts aren't that exciting. Do I think it's a new paradigm for content creators? I would say like, yeah, I think it's a more direct way of monetizing the content you put out. If you have interesting content, people want to speculate on it, and therefore you get like trading fees. Like, it's a much more direct way of doing it instead of how do content creators make money today? Like through sponsorships and ads, where it's like they're shoving something down your throat and they're getting money for doing that. It definitely feels more direct. It removes like a middleman in the process. I think that content itself though is pretty worthless. I think that there is something though about like the creator coins themselves. So I agree with Meppo, like creator coins are the secret sauce. I said this in the 0x Research Telegram channel the other day, but like I'm not too keen on buying a creator coin because they post like really cool, funny TikTok dances or something. What I do want to bet on though as a person, I want to bet on that person maybe converting their clout into building a network of like building businesses, pretty much like leveraging your network effects of who they are, their brand, and building a real world business. Like I want to bet on Mr. Beast, not because he's Mr. Beast, the content creator, because Mr. Beast can then use his content, his network effects and his brand to build Mr. Mr. Beast's burgers, Mr. Beast, whatever, protein bars. I don't really know what he builds or creates. I have no idea. But just using him as an example, like I want to have ownership in the future businesses he creates. I don't want to have ownership in him as a content creator. And I want to bet on Elon Musk in 1998 before he built PayPal, SpaceX, Tesla. And I think, who was it? Someone in the chat, I think it was Jim Perillo, said it feels like indentured servitude, where you pretty much own someone and you get all like ownership of what they create in the future. And to me, I didn't say this back in the Telegram, but I feel like raising money from VCs kind of feels like indentured servitude. Like people pivot all the time. They take VC capital, their startup fails, and what they usually do is like you're betting on the founder. The founder eventually pivots and uses your funds to try to eventually create, returns on the VC investment. Feels no different to me.
I mean, but you don't actually own, like in this example, you don't actually own any upside in Mr. Beast like business ventures. It's totally not tied to any endeavors. Like not yet.
Not yet, right? Like, yeah, it's the same thing as Believe. Like, I have no upside. I actually don't own anything from Believe as much as they want to say it's internet capital markets. It's like not. It's meme coins. And these are still 100% meme coins on Zora. But I think if you squint and think about like the marketplace that's potentially being created here, and if there's enough regulatory environment, and if there's someone willing, first of all, you got to get people that are content creators willing to say, I'm going to sell 1% of all future businesses, or maybe the first 10 businesses I create in the future, back to my token holders and give them cash flow rights or something. Like if there's a regulatory environment and you get people that are interested in doing something like that, I think that there could be a huge market here. And I do agree if Zora can do this, like it could be a multi-hundred billion dollar company or token. But the bet is that these aren't just meme coins.
It does seem weird though that like a platform for content would become then the platform for like creators to sell equity in their businesses. You know what I mean? Like those are very different. Like I could see if you get Mr. Beast interested in crypto, he could just do an ICO. He doesn't even have to, like, he doesn't need to have a Zora coin and then make the Zora coin have upside in his future business revenue. He can just sell a portion of that business by tokenizing it on chain, or even, doing a traditional raise and then going into the markets. Like, Mr. Beast is big enough that he could raise money if he really wanted to for a business venture, certainly, and then go and do a traditional IPO if it was successul, what have you.
I don't know. I'm a little bearish on Zora, to be honest. Like on a longer term horizon, I think it will die down. I could be, of course, wrong, but I don't know. Believe also started as cloud, like before it was Believe, and it also was focused on creator coins and didn't get much traction. My opinion is that it will remain like purely a meme coin and purely speculative. And the reason creator coins are going up today is just because we're in a exuberant phase of the market. But that's it. Like I don't think longer term you'll have like the next like YouTube stars going on Zora and like tokenizing their coin. I don't think so.
I agree. I just want to say I'm not necessarily bullish Zora, but I agree that like content, I think creator coins are an interesting phenomenon. And just to, Daniel, I know you unmuted, just to say what you said about Mr. Beast could just like ICO. I think the idea is like, yeah, they can ICO. In this world, you bet on Mr. Beast, and then he maybe also ICOs for the individual product lines or businesses he creates. But pretty much the index bet on their portfolio of businesses is their creator coin, which is like kind of cool. Now, will it ever become something? Who knows? But I like the concept. It's just whether or not it's feasible. But sorry.
Yeah, no, I think Zora in its current form, I don't think it'll last. But like what we're talking about here is like your creator coin is like, it is a call on your future cash flows. Like I think that's entirely valid. And so like in 2021, when like NFTs were getting big, music NFTs, like a lot of the talk was around like music bonds. So it would be like, you're like an upcoming artist, you don't have a lot of money, you're working a job or whatever. You could say, hey, I'm I'm tokenizing. I'm gonna make an album. I need $50,000 to quit my job and live for a year to make it. And if you invest in the bond or whatever, right? Like you have a call on like whatever it is, like 50% of all future cash flows from this album, like through everything, like all every source of revenue that it generates goes back to the token holders. And right, you could like apply that concept across like a myriad of different industries, whether it's like music, art, whatever. And I think that that's like super super interesting, right? And then also, right, you can speculate on the token itself, so you can like if you're bullish on a content creator, you can just buy their coin. You don't even necessarily need to own it. And then, the coin can give you access to like special things. Like I think that it's absolutely going to be a thing. I think, going 10, 20 years down the line, like, like if AI, and it's too long of a time horizon to talk about, but just for fun, like, if we enter into a post-labor society and AI and robots do all the physical work and everything, like, and everyone just becomes creators, like, yeah, everyone's gonna have their own creator coin. Because then, like, if we're not like working all in an economy to like help each other live, like then everything just becomes about like clout. Because like if you don't need to like work to like live, the other like objective function of life is like mate selection or whatever, right? So everyone's just like working for clout. But I do think it's like I think it's directionally correct. I don't know. I don't think Zora is like the one that's gonna get it right.
It could just be too early. I can't see the comment anymore because I had to refresh from Ryan, but he was kind of like Ryan Connor saying, why would a creator move from a platform with like billions of users to one, thank you, with I think somewhat jokingly 7.5 MAUs. I think we've got the numbers on daily posting accounts on Zora. It's probably like 20K. But the point stands, like, why are you going to take a 1,000 or 1 million X cut in like your potential audience reach, just to get like coins to be associated with your posts? I think the other thing is like expectations of like the norm today are a big factor here, right? Like the incentives behind like going on, if you were a big creator or like modestly sized and then you like went onto Zora and made posts and kind of hyped this thing up, and then there's no expectation for you today to like give any sort of future value from like enterprises or other efforts that you go and do, and so the incentives today are almost like aligned in such a fashion where if this is kind of like a fad or like a hype cycle, you should just dump your content tokens and take the value out of that. I guess they don't even have to sell the tokens because they get the tax revenue from the trading volume on the coins, but it feels like the incentives today just aren't really aligned around it, and there's like maybe years that would go into like reforming the kind of like general market expectation that when creators like make a creator coin on some standardized platform or way of doing it, that then means their future efforts like go to the holders of that thing. There's no belief or like expectation of that idea today, and so like if you're getting into this now, you kind of have, for yourself, you don't have any like future downside as a creator in this situation. You can kind of take the profit today and not have to worry about that in the future. So that feels kind of tough. But I do agree with the point that like down the road, I could see the potential for it, because I do agree that there would be interest. Like, I think I agree with a lot of points. Like people would love to like bet on their favorite creators, like one, just like getting bigger or getting more popular, right? If you really loved Mr. Beast when he was a 100K viewer guy and you wanted to bet on him going to, doing hundreds of millions or billions of views, like, that's kind of an exciting trend to be able to like ride out and have upside on. Similarly, like if you could have bought a stake in, kind of his enterprise value before he went and did like Beast, whatever he did, like the burgers, he's done chocolate bars, he's done different stuff, right? If you could have explored some of those opportunities, that's great. But Yeah, I don't know. It kind of hinges back to this same like difficulty or like question around the traditional like IPO or like kind of TradFi process of like building businesses and raising capital for them versus just like having unfettered access to all markets. And like historically regulation has been the difficult part there. But yeah, I don't know. I think a bigger part of that is just like today it's not going to make sense for Jimmy Beast to go out and get capital from a bunch of small fish when he knows fairly reasonably that he could go and raise, probably a couple $100 million or tens of millions from larger investors with limited issue. There'd be no difficulty in doing so. And they wouldn't have to worry about all these extra kind of like forging the frontier of like a creator coin, which would have obviously more risk involved.
Agreed. I think the same concept that I think Ryan, I don't know if he's still listening right now, but Ryan had this whole thesis on Believe, why it was so potentially paradigm changing, because it's going after underserved builders that create hype cycle type apps that don't necessarily generate VC returns, but like generate really good returns. Like, let's serve that market. This Zora today does not serve Mr. Beast, Kai Cenats, all those huge people. It serves potentially serves very early content creators that are posting the same content on TikTok and YouTube and wherever, Instagram, and are getting $0. But then they're getting, maybe if their content's good, $100 on Zora. And then eventually, if the people like their content on TikTok and Instagram, like, yes, they will rise the ranks. They'll eventually maybe start making money on those platforms. But maybe the bet is that they're going to be loyal to Zora because they were the first people to give them their first dollar and their first 10 views. And then what those people are going to try to do is say, don't watch me on TikTok. Don't watch me on whatever. Watch me on Zora. Move to Zora. And hopefully the demand follows the supply and vampire attack these other social media platforms long term. So again, it's a once in a like it's a long shot. It probably won't happen, but I think it'd be foolish to just like dismiss it immediately.
No, you're right. It's such like a network effect based thing. It's like before, and this isn't like a network effect thing. It's an economy of scale thing, but like same dynamic. It's like, other than Tesla, there hadn't been a auto manufacturer in the U.S. since 1950, and so maybe this is just the type like social, these consumer apps. Maybe it's just the type of thing where it's like none of them are going to work. And then there's going to be one that just kills everything else and becomes the thing, right? It's like, I think it's so intuitive that there will be the, cryptofication of social. It's just, it's not going to need to be 10x better or like 100x. Like, it's going to need to be like whatever, 1,000x better. And for whatever reason, blow up. For it to actually work, right? Or maybe it's just the social apps integrating like this stuff into them. So who knows? But yeah, I think I agree. It's definitely like, it's not serving the Mr. Beast. It's like the up and coming people that want to get exposure. Like, this is where they could start, and sell their future cash flows to start their creative journey or whatever, right?
Yeah. I think that's a fair argument. I think if you're looking at like pump live streaming, you kind of have to be making that same, taking that same position as well, right? Like, you're not going to attract the winners today. It's like trying to carve out a new marketplace of creators that's going to hop onto this platform that's like, content plus tokens behind it. That's unproven, but if it works out, then like there's potentially a lot of upside for those new adopters. But yeah, you're battling uphill from both directions, right? Because you're working with the unproven creators and you're working with the unproven platform. So it's sort of like a moonshot idea in that sense. Awesome. I got one more topic. I'd love to talk about treasury companies before we close out today, gentlemen. But before we do that, I want to give one last shout out to another sponsor for today's stream, Algorand. Thanks to Algorand for sponsoring today's stream. AlgoKit 3.0 includes all the tools and open source resources you need to unleash the power and performance of the Algorand blockchain. Access a resilient network with instant finality, consistently high throughput and low fees, and layer one features like atomic swaps and native assets. No smart contracts required. Whether you're building DeFi protocols, enterprise solutions, or next-gen dApps, AlgoKit has all the tools you need to build faster, safer, and smarter. Thanks again to Algorand. And before we close out the app, let's talk. Hell yeah, Algorand. Before we close out for today, one more topic. I want to talk about treasury companies. The other thing I want to do is pull up some data from, we have a treasury company dashboard now on Blockworks Research. Shout out to Dan Smith and crew. I don't know who all helped in that one, but I imagine quite a few of them. It seemed like it was kind of a pain in the ass to put together, to put it lightly. We've talked about the treasury vehicles, DATs. There's like acronyms for them now because everybody in finance industries and tech loves to spit out acronyms for absolutely everything. So the DATs, the treasury codes, there had been a ton of excitement in the past couple months, like especially with the Ethereum based ones like Bitmine, Sharplink Gaming, SBET, and BMNR did some massive raises and purchases of ETH. I'm going to pull up some data here. Just showing, sorry, I wanted this chart. We track, I want to say like 20 or 30 of these companies. And just looking at the aggregate trading volume on the stocks, you can see like mid-July, there was a little bit of like a spike, not too crazy relative to the recent activity. It seems like these companies have kind of been bouncing up and down in terms of volume, but from like a low of 3 to 4 billion on the daily to up over 14 billion back in the middle of July, and we've kind of fallen off from that period. And it seems like some of these have not been faring so greatly in the past week or so. SBET, Bitmine, both down significant amounts in the past 2 weeks or so. One of the big talking points here has been around like, how long does this go on for? Like, there's been a lot of like pretty open discussion, honestly. Like Empire had some folks on from Parify, talked about, the pipe investors, like it's a pretty great deal for them. You get in and then, you serve out your lock and then you sell your shares. And it's a great time. And they were pretty candid. Like, if I was a retail investor, I don't know that I would be touching any of these things with a 10-foot pole. It seems like fundamentally there's kind of like a clock on these things where when those unlocks start happening, like it's a big question mark. Like it really does not make sense to be buying anymore. I'm curious if you guys have any big thoughts or takeaways. Like, is this something like with the exuberance in the markets today, like kind of generally, we're seeing IPOs go crazy. A lot of these companies have, they make the announcements of purchasing or like securing funding, 500 million new funding to go purchase ETH or Solana or Bitcoin. And then they pop on the news. Do we see that continuing much longer? Or is this really just like when these pipe unlocks start to occur, the game is kind of over? And what does that mean for like Saylor and Strategy? Because they've been able to kind of keep chugging along.
I don't have takes on the performance of these like stocks in particular. Like how will they perform? I think like MicroStrategy or Strategy is just a special like golden nugget. It was the first to do it. It's focused on Bitcoin. I feel like that's different from the other like treasury companies we have seen pop up. What I will say is that if an investor's goal is to just get exposure to the underlying asset, I think ETFs are a much better way to do that and have a much more favorable structure. I think like treasury companies potentially make more sense for assets that don't have like spot ETFs live. So you can have like an easier way, let's just say, of getting access to it if you don't have like this like favorable vehicle that's been tried and tested multiple times. Longer term, I think treasury companies may have a place if they kind of advance the network or contribute to it, which is something that ETF issuers cannot do. What I mean by this is consider the example of DeFi Dev Corp, where they have their own validators. They spun out their own LST, which is the FDD Sol with Sanctum. They have onboarded that on Camino. You can use it as collateral to borrow more Sol and loot that asset. And so in that way, you kind of have like vested interest in the network, and you're helping advance like its DeFi ecosystem. So like that's one way that I would say like maybe there's a longer term like outlook for these companies. But if you're just like providing a vehicle to invest in the underlying asset, I think ETFs are just a much more better way to actually do that. In longer term, I would expect them to die down if they don't like work as operators inside a network or do something like to like do something more than just get exposure to the underlying, if that makes sense.
I'm not educated on the topic. I vaguely understand how these work in practice. I haven't watched any of the other podcasts, unfortunately, on this topic. I know, again, like I know like a naive way of how these work. I've honestly just like blocked it all out because it just sounds like it's another sophisticated way to raise money and dump on retail and generate quick cash. I want nothing to do with them, and I'm just going to put my head in the sand and just act like they're not real. But I do think that my understanding is every single treasury company has their own different structure, and like the proof is in the pudding, or like the devil's in the details, and like how they're raising their capital, the debts, the covenants, the warrants, all that good stuff. But I don't have time to read the 10Ks and 10Qs of all these. I'm sure there's maybe money to be made, but not my game. But I do think there's probably going to be a blow up from these eventually.
Yeah, I guess that's been the one big thing is it seems there's a lot of conversation around like, they're really not that, leveraged, or there's not really that much like debt in the equation here. The big thing is really just like them popping up on a premium relative to MNAV. And if we look at the ETH ones here, there was like a significant pop in a bunch of these companies earlier in July. And we're seeing, over the past few weeks, those compress down to, in the mid like ones in terms of like a premium to their kind of like MNAV of like ETH assets, I guess in this case, or maybe ETH assets plus cash. But either way, that's been kind of the one underlying question here is, if the excitement kind of goes away when the premium to MNAV kind of erodes, how do these play out if you then get to like a parity level where you're trading at like a premium of one, or like a lack of a premium, or below a premium. And I did see some notes the other day from Strategy about kind of like formalizing their process around, when they're going to offer, do ATM issuance of new shares. And they had like a pretty specific guideline of like, we will not, do any new ATM offerings if the premium to MNAV is like less than 2.5. On the belief that like these other offerings that they're doing, like these preferreds, they have all of these like instruments now, Stride, Stark, Stretch, like there's 4 of them now or so. And I guess the belief there is that they don't need to like directly continue diluting the shares. They can do these, offer these other vehicles, raise cash that way, and then buy more Bitcoin via those means. I guess TBD, but I do know that I think the Stretch offering is expected to raise like 4.2 or 4.3 billion in cash. So, I mean, that's again another big clip that Saylor will have to chuck into Bitcoin. Maybe the broader question for like the crypto markets is like, if the premium and the excitement around these things go away, or like kind of cools off a bit, and investors aren't shoving cash at them to then shove into crypto assets, like what does that mean for the market itself? Like, do we see a loss of a bid there? And does that mean, downside for Bitcoin and then alts? I think that's maybe the broader concern here, rather than like, if you're trading these, that you're kind of gambling, right? But Saylor and the others have been a big, like for ETH especially, right? There's been several billion raised to buy ETH from these companies in the past 2 months, that's a pretty big like net positive bid into that asset. And if that just disappears because these premiums go away, that leaves kind of like some downside potentially.
There's a really good piece that was written by this Count B Water Ltd. I don't know if you guys saw it or shared around a lot. It pretty much compares DATs to the investment trusts in the 1920s. I don't know if we can share a link. I don't know if we're allowed to, but he has like a 3 or 4 part series on like comparing these DATs to what were pretty much these closed-end mutual funds back in like the 20s, and it was like a sign of exuberance in the market, and pretty much using financial alchemy to arb the NAV to premium, and it pretty much ended in, no surprise, tears, if anyone knows what happened in 1929. So again, there's a lot of parallels. They're not exactly the same, but it is, I think it's going to end the same. I think that the moment that one DAT dries up in terms of bidding, it kind of shows that the emperor has no clothes, and then there's just going to be a bunch of selling of all the other DATs. It's going to have a domino effect. And again, who knows what that means for the actual assets on these companies' balance sheets? Like, are they just going to have to dump them? And not going to, I don't know. I'm trying to diversify away from anything that has a DAT, actually, like in size. Because I do worry that it's going to lead to a large like event.
Yeah, I agree. I was looking into these. I was going to write a report on this. I think we still are writing a report on this, but we on Empire, there's a great podcast on this at Permissionless. We had a live panel talking about this, and like I really do think that it's like a case you have to, you really have to dive in and do analysis on them. Like it's on a case by case basis, right? Like the framework I kind of put together was premium or discount to NAV, asset per share, accretion, capital structure and leverage profile, asset growth drivers, the quality of the management team, and their ability to execute their plan. And then obviously like, the underlying asset profile, like whatever it's on. It's like, we just like looked at Bitcoin, in like Bitcoin DATs in particular, like obviously like what Saylor's doing, I think is, right. Like if you're investing, like you're effectively betting, like he's slightly leveraged, right? And he's betting that the US dollar will depreciate faster than the interest he's paying on his debt, right? And as long as that happens, then right, effectively, right, like his company's going to be worth more over time. The problem is if we have a 2-year crypto winter, right, how many of these things are actually structured and have the investor confidence to get through that? And the answer is probably like, you can probably count on one hand max. And the problem is if, all these things, they're not as liquid as if you just buy Bitcoin as well. So if the selling starts, all of a sudden, right, like selling begets selling, right? Like asset markets are reflexive, and you could see massive drops in these things, right? Like below their fair valuation, right? If you think of these as like a leveraged bet on the underlying asset, there's probably, right, like a fair market value. Whether that is a higher Sharpe ratio than Bitcoin in itself, that's a different question. But like to me, if you're, let's say, buying one expecting like 1.2x performance against Bitcoin, but the downside is it could go down by 80%, or gap down 20-30% over a weekend or something, right? Like it just doesn't make sense on a risk reward basis, right? Now, like maybe Sailors, you can make an argument like, oh, this has a higher Sharpe ratio than Bitcoin. But right, like once again, it's like you need to analyze each one of these. Like I don't even, it's quite a hefty task to try to understand them on a case by case basis. But I think there's some basic things you can look at, and I mean I agree. Like for me, it's like a stay away, because even if Sailors is theoretically like a good bet, you could say, all right, at this point in the cycle, is it still a good bet if you know that it's going to have, if it's going to outperform Bitcoin to the downside? So I think that they're interesting. I think for assets that there aren't ETFs for, like what Carlos was saying, I think that they could particularly be interesting. But right now, I think it's pretty risky. Like if you don't fully understand them, it's probably best to stay away.
Yeah, I guess the tough part here as well, maybe to round it out, is Saylor has the benefit of like averaging Bitcoin since 2021, and the highs then are minus 50% from or 2020 even. So some of the highest prices that he paid years ago are still minus 50 or 60% from today's price, like all time, Bitcoin basically at all time highs today. All these brand new DATs that just kind of like jumped into the playing field. They're all like averaging into the highs right now, right? Like they've secured investor funding and are shoving in $1 billion into ETH, like right as it's at like its highs for the past year, which is a bit different than like Saylor averaging into some Bitcoin over the course of 2020, 2021, but then also 2022 and 2023, and like now having a bunch of those, like a big portion of that like stack that's been averaged into be up, maybe 10x. Obviously, some of his purchases are also up here at the top, but he's weighted down by his lower average purchases as well. So a 40% pullback or something like that would not, be scaring the pants off of him, but it might scare the pants off of all these companies that then just bought the top into a pullback. That would be probably a concerning situation for them. So they don't have, at least these newer companies, right? They don't have this like greater room for downside, I guess, that Saylor does, that he's kind of built up, right, for being in for a few years now. So that's maybe the bigger concern of just like entering the marketplace, taking in 5 billion and just shipping it into a coin near or at its all-time high. That's a tough one to consider. But we can move on from it and close out for the day. Maybe just to land on a friendly note, any thoughts on Chill House, guys? Going into the weekend, anyone going to be chilling at the house? Any grass touching? I saw, funny enough, I don't own the NFT, but the Chill House devs, or maybe someone related, launched a little Chillers NFT collection, which is kind of funny. It had a little bit of a pump and dump on the chart the past day, so maybe not too exciting if you were trying to gamble on those, but either way, the Chill House meme has been living on despite being a beta of a beta of a beta.
Chill House token is effectively a greater coin, so I'm bullish. Very bullish. I will be chilling in my house this weekend, and we'll be buying more Chill House while I chill in the house. So,
do you own Chill House, David, or is that a meme?
I met the dev and I was like, I'm good, fam.
Yeah.
Honestly, shame on me because didn't it go up like 100% like 2 days ago?
It's been very volatile. I say that much. So if you would have been excited when it went up 100% and wouldn't have sold, then it's probably better that you just weren't in at all. But yeah. Awesome. No other thoughts. We'll close it out there, guys. Thanks for coming on today. Shapiro, Carlos, David, Efforcap. Glad to have you guys on. And I'll have to have a few of you guys on more frequently, David and Shapiro. The viewers don't get to see your guys' faces that often. So, well, unless they follow you on Twitter, then maybe they do. Yeah, thanks for coming on, and we will see you guys next week. Enjoy the weekend. Touch some grass. The markets are kind of red today, so it's probably a good time to get outside and get away from the screens.
Thank you, guys.
Appreciate it.
Thanks, guys. See you.